Thanks for clicking. Dozens of buyers of pre-construction homes are finding themselves unable to close in the Oakville area, as higher interest rates and lower home values put even more downward pressure on the real estate market. The report from the Toronto Star comes a little over a month after we heard something very similar happening in Brampton, where home buyers protested outside of the developer's office after it refused to lower prices or extend closing dates. However, the Brampton protest involved buyers who were unable to close due to home values coming in lower or them being unable to secure financing. But the case in Oakville, reported by the Toronto Star, involves another complication. That is, the builder, Macklem Homes, is already selling comparable units for a lower price than those which were sold last year.
Welcome to the show.
So what I want to do today is go over the inability of these home buyers to close on their purchases in Oakville, take a look at some of the options available, or lack thereof, and then discuss some of the implications for the real estate market going forward. Bank of Canada Governor Tiff Macklem is expected to speak in a few days, where he will no doubt go over Canada's monetary policy going forward. We'll obviously have an update out on that speech on this channel. Click like and subscribe if you want to get those updates, but for now, let's take a look at Oakville. Onto Oakville. Very briefly, dozens of home buyers bought pre-construction units yet to be built, while the market was still riding high at the beginning of 2022, paying top dollar at the time. Those buyers assumed that real estate prices were going to continue to go up and that interest rates would remain low, and as we all know, they did not. Since those buyers signed those contracts during the peak of the real estate market, interest rates shot through the roof, real estate values plummeted, and now these buyers are having a difficult time closing on their homes, as the homes are not appraising for the purchase price. As we've talked about so many times before on this channel, if a buyer agrees to a purchase price of $100,000 and the bank agrees to finance 80%, but that home only appraises for $80,000, then the bank is only going to finance 80% of that $80,000, or $64,000, leaving the buyer to come up with the additional $36,000 needed to complete the transaction. In the cases in Oakville, however, the values are much, much higher, with Brampton lawyer Ajit Saroha, I probably butchered that, and his wife agreeing to buy two homes valued at $2.46 million each in February of 2022 at the peak of the real estate boom. According to the Toronto Star, the couple put down over $800,000 in deposits and are now having trouble closing. It is not just that the appraisal is coming in light, which I'm assuming it is, but also that the builder, Macklem Homes, is now selling similar units for hundreds of thousands of dollars less than that which was agreed to by Saroha and his wife. And with Macklem Homes now selling similar units for hundreds of thousands of dollars less, the likelihood that the banks are going to finance Saroha and his wife's purchases are almost nil. Saroha told the Toronto Star that Macklem Homes is undercutting him and making it impossible to close the deal. Saroha, whose practice areas include real estate law, said he's not sure who to blame more: the builder, the Bank of Canada, or Prime Minister Justin Trudeau.
The one thing you cannot do is blame yourself.
And it's not just Saroha and his wife that are having problems. In another case, Cameron Ahmed, another home buyer, noted that the builder is referring them to their lender partners, who are offering to finance 100% of the sale price, but the rates could be upwards of 10%. In February of 2002, a decent uninsured mortgage rate would have been 3.29%. On a purchase price of $2.46 million with 20% down and a 30-year amortization, that would have put the mortgage payment close to $9,000. That same amount now, using a 10% interest-only payment that we can assume from a private mortgage lender, would put their mortgage payment up to $16,454 per month. So it's not exactly clear that these lender partners are going to be viable solutions. But what is clear, at least thus far, is that the builder, Macklem Homes, is not letting these buyers out of their contracts, with VP of Communications Brent Carey writing that prices may rise or fall between signing and closing, but all parties are obligated to abide by the firm contract they entered into and the risks of market fluctuations they assumed. So according to the statement made by Macklem Homes to the Toronto Star, the builder has every intention on enforcing these contracts.
It's called a contract.
And Macklem Homes is under good legal footing, as we talked about before on this channel. In Deco Homes versus Serikov, the court found in favor of the builder when the buyer was unable to complete his or her responsibilities under the contract. In fact, as we've talked about on this channel many times before, in cases where buyers are unable to meet their obligations, the courts have consistently held in favor of the sellers, enforcing penalties on the buyers when they are unable to fulfill their obligations. So, in all likelihood, these pre-construction buyers are probably stuck. The banks are not going to lend themselves into a loan that is underwater instantly. and the courts have consistently upheld the rights of the developers in these cases. There is a very good chance these homebuyers are probably going to lose their deposits, $800,000 in the case of the Brampton lawyer that we discussed earlier, and they very well could get sued. Mattamy Homes can sue these homebuyers for the difference between what they agreed to purchase for and what their homes actually sell for. And I think this is going to become even more of a problem as time goes on. We saw the protests in Brampton, now we're seeing them in Oakville, with buyers who bought 12 months, 18 months ago, when prices were high and interest rates were low, being unable to close. And with buyers unable to make their purchases and these developers selling at a discount, that's going to put even more downward pressure on the price of Canadian real estate going forward. With that said, we will continue to track how far those prices do get pushed down on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.